Okay, so it is now the first week in November, and we are in the position to look at what actually went on in the Toronto real estate market for the month of October. What is happening in Toronto real estate? We're here to talk all about it, strictly facts, with maybe a little bit of opinion and interpretation layered on top of it. I know if you're interested in Toronto real estate, this is something you're going to really want to hear because things are changing and actually for the better, which is really interesting and very welcome to see. My name is Ralph Fox, and I am the broker and co-founder of Fox Marin. Today, we have my partner in crime, Kori Marin, co-founder and broker at Fox Marin. And today, we are going to take a deep dive in the Toronto Real Estate Podcast and talk about all things in the fall for Toronto real estate. Kori, so glad to have you here.
I'm so glad that we're chatting about this. I would also like to acknowledge that this podcast is coming out after some significant events. So, number one, we had our interest rate announcement last week, which is only to the benefit of all of our viewers here. So, something to celebrate. Number two, the US election is finally behind us. This is also to the benefit of everyone listening today, that we have this behind us and we can just move on. And we'll talk about that a little bit more when we dive into the data. And number three, I would just like to say that our Fox Marin team photo shoot is also done for the year, which is always a huge production. And I'm glad that is tucked away as well. So now we can focus on the data, which is why everyone is joining us today. Let's dive in and talk about all things October. And let's reflect on how those numbers in October respond to the last 12 months as well. So for those of you who are listening or tuning in on YouTube, we pull all of this data that we're sharing with you on these slides today from the Toronto Regional Real Estate Board, and we have plunked these numbers in from the recent report. All of these charts are done by us, so they're custom for you. And I hope I did these correctly because I am manually pulling the numbers from one place to another to create the charts. So just want to put that one little caveat on there in case there's a one or two out of order. I can be a little bit dyslexic from time to time when it comes to numbers. So very trustworthy information, excited to jump in. So our first slide, is there anything else you wanted to add to that about the big picture stuff before we get into the numbers, Ralph?
Actually, there is one thing that I would like to add, and that is I think that we have, going back to what you were saying, Kori, the month of October, there was a lot of uncertainty regarding interest rate and where are they going to end up and where's the U.S. election going to end up. And regardless politically where you sit on the spectrum, I think what's really important is there's a lot of certainty now in terms of where we're going with interest rates and where we're going politically, at least from the US, which will really set the tone here in Canada. Markets like certainty. Seeing all of this positivity that we're seeing in the market combined with certainty as we move into November could really be helpful to stabilize and help see even a little bit more growth in the market.
Exactly. And we can all focus on other things.
Yes.
All right. So let's look briefly at monthly reporting. So this first slide here is dedicated to the month of October, and it's dividing the four asset classes that TREB uses when they're looking at these high-level numbers. Now, you have to remember we're looking at all of the 416, was a giant geographical area here that this is encapsulating. And we're breaking it down into four different asset classes: detached, semi-detached, townhouses, and condo apartments. And you're going to see the average price for each of these different asset classes, the change year over year in this table, the total sales volume, which means the amount of transactions actually going through the system, so sold properties, and that change year over year. So when you just look at this high level, I must say it looks pretty positive. You're seeing prices up versus last year at this time, up overall, with a small exception with condos being down slightly at only 1%. But what's even more interesting to look at is the total amount of volume moving through the system. You can see double-digit growth across all categories in the amount of activity, meaning there's way more sales now in the month of October than there were last year at this time, which I wouldn't have intuitively felt because I feel like everyone's been so distracted by the news over the last month. So it's interesting to see when you actually break down the data that there's a lot more real estate deals happening than it might feel like when you work in this business day to day.
So I think if we focus on the far right column, you'll see detached sales up 44%, with price change up 4.4%, semi-detached 36%, up 3.3%, 40% growth in townhomes in terms of sales year over year. And the most shocking is condos, because I'm sure you've heard a lot about stagnation and almost a condo crash happening. And to see sales up 32% year over year, 1,162 sales, with the average price, while it's down year over year, it is up month over month. So seeing that change in story is really, really interesting. It's only 1 month, but if this trend continues, we could start to see the condo market shockingly starting to bounce back in a way that nobody had projected would happen this early on or close to the end of 2024. Most people were projecting the bounce back to happen maybe summer of 2025. So to see this is really interesting.
And we're going to break down condos in more detail in a further slide. But this is just high level, very positive. It's just nice to be reporting something that's optimistic when it comes to the numbers. So now we're going to look a little bit more macro picture and move to all home types. So this slide is dedicated to everything that moves through the system that's just sloshed into one category. So everything that MLS is reporting. So you can see here again, this is repeating what we said on the previous slide, but transactions and sales are up through the system. We're up 44% more sales than last year at this time. What is moving the needle? Likely these first interest rate announcements from the BOC is stimulating that buyer activity when people have been sitting on the sidelines with a wait and see attitude.
Also, the surprise announcement by the Liberal government with the policy change in uninsured mortgages, moving from a cap of 1 million to 1.5, meaning if you're putting less than 20% down, as of mid-December, you'll be able now to purchase up to 1.5 million. So that cap has moved up significantly, and the amortization has moved on those from 25 to 30 years. So even though that hasn't actually come into play yet, I think we're starting to see a lot of people in anticipation of this new policy coming into effect, which will be very, very stimulative to the demand side of the market. I think will play a really big impact. And I think that's what's really helping to move the needle in tandem with lowering of interest rates.
New listings are up 4.3% versus last year. So this is new inventory coming online. So again, we really felt like the fall was going to be a massive dump of sellers placing their condos and homes on the market. And yes, we have certainly seen that. There's more inventory available to purchase than last year at this time, but we're not seeing an increase of 10%, 15%, 20%, and so on. There's a marginal increase of 4.3%.
I think it's interesting if you see an increase in transaction of 44% and only new listings of 4%, new supply coming online. Again, this is something to watch, because if this trend continues over the next few months, meaning you have far more transactions than new listings, what we'll do is we'll start to see a lot of inventory getting eaten up and the market starting to tighten. So this is something really, really to keep your eye on.
And active listings is important as well. And we're going to talk about why active listings are important when it comes to the absorption rate. We'll get into that in the next couple of slides. But active listings is the amount of inventory that the market is not absorbing month over month. So we are definitely up about 25% versus last year. So we've got just under 25,000 opportunities out there for buyers, more than last year, which was sitting or hovering just over 19,000. So 100%, there is more opportunity there. Things are not selling as quickly. And you can see that at the bottom of this table as well, is that the average listing days on market has gone up almost 30%. So more supply, more opportunity, more things to select, less FOMO, less velocity means product or homes or condos are just not selling as quickly. And that's why you see the active listing total not get flushed through every 30 days. And then here, just a quick snapshot of the entire market in terms of price, which is the fourth line in this table here. You can see that just overall, everything squashed in together, we're up 1.1% on average price versus last year at this time, which just blows my mind. Anything else you want to add, Ralph?
The only thing I would just add is, again, keep your eye on transactions for the months of November and December. And if this continues, you're going to start to see a tightening happening across the board, especially in condos, which I don't think, like myself, I'm pretty sure you, Kori, like nobody really expected to see the shift that we're seeing in the condo market, at least for the month of October. It's quite interesting.
And it might shift the other way. We're not predicting that we're going to go off on this like zealot move right now. It's just surprising to us when we see the data come out and look like this compared to how we feel about it. So always good to have these checks and balances. All right, let's talk about the absorption rate. Ralph, you're always so good explaining the absorption rate. So why don't you explain to our viewers what the absorption rate is and how we use it and why, and then we'll break down the absorption rate for the last 12 months.
One of the metrics that we look at every single month at Fox Marin, and it's what we use to advise our clients, is what's known as the absorption rate. And it's a metric that a lot of economists use when they want to understand the health and function of a real estate market. And so the idea with the absorption rate is if you took everything that's on the market today and added no more properties after today at the current rate of sales, how long would it take everything to sell? And so right now we are at 3.68 months, which is pretty friggin' interesting because taking the whole market into consideration, that's shown that we've come down a lot. And we have another chart that we'll go through in a minute that will show you this in better sort of context, looking at it over the course of the last year. But that's massive. And I think a large part of it is the condo market, which was at 7 months, 7.1 months of inventory. That shot down to 5 months based on that increase of transactions that we were seeing earlier. So if you look at just an overall market, 6 months or longer or greater is considered to be a buyer's market. Clearly, we're not in a buyer's market. 4 to 6 months is a balanced market, and under 4 months is a seller's market. So it's really, really interesting if you look at this to understand that we are overall now out of balanced market territory, and we're starting to move into a seller's market. And if you take the condo market at 5 months out of this equation, low rise is definitely in a seller's market, especially when you start to look at where the price movement is going.
And so the next thing you're like, okay, that sounds good. We're in a seller's market per se. Now, we have to compare this to what the seller's market in Toronto that we've been acclimatized to over the last 5 to 10 years, where we've seen inventory as low as 2 weeks and 3 weeks. So this is a lot more supply than Toronto is acclimatized to. So I just want to acknowledge that. And then I also think it's important to compare where things have been over the last year. So this is just one snapshot in time. Let's look back at the last 12 months, which this next slide is dedicated to. And we compared October 2023 all the way up to October 2024. So you can see that inventory was higher than it was in the winter period of 2024. And then it started shooting up significantly over the spring and summer of 2024. But look at that drop off from September of this year to last month. So in September, we are in the 5+ month category, and now we're dropping into the 3+ month category. So a lot of inventory was chomped up. We also just want to acknowledge here in Toronto and a lot of places across Canada, the winter is a shrinking market. A lot of people are not listing their homes or their condos really in that seasonal period where they just don't look their highest and best. Your January, February, March period, the spring market per se, whatever that means these days, none of us really know, is when the weather starts to turn and there's more sunshine out there and you can showcase your lawn and your beautiful views from your condo windows, for example. But this is really, really interesting to see how we hit the highest point of inventory. Are we over that period? Is September 24 the height of inventory? If you look back in the last year, it looks like we might be past that period.
I think what's really interesting is if you look at this chart and you see a major jump happen in April, May, June. And what happened was June was the first rate decrease announcement. And there was a lot of people thinking that the symbolicness or the symbolism of that first interest rate reduction, even though it was mild, 25 basis points, was telling the market that we were at the end of the interest rate cycle and rates were going to start coming down and easing would start to be putting in place over the rest of the year. So in anticipation of that, a lot of people were thinking buyers were going to flood back to the market. That never really happened. But what we did see was a lot of listings that people had been sitting on for a long time came to market. And you can see that being reflected in May in anticipation, June when the reduction happened, and over the summer, that steady increase. So it's really interesting to see we're getting even more rate reductions and more are on the way, but yet inventory is really starting to tighten a little bit. So really interesting. Again, 1 month does not necessarily make a trend, but we are sensing or showing just from the data that there was a shift from September to the month of October. And if this continues, we could be in a very interesting market, especially going into 2025.
100%. All right, let's move off inventory and let's just break down pricing just a little bit more. And we're going to look at 3 categories today. We're going to look at detached homes over the last 12 months, semi-detached, and condos. Condos being the one where everyone feels the most amount of heart palpitations for understandable reasons. And I feel you too. So let's look at detached. So this is the average sale price of a detached home in the 416 since October 2023 up until October 2024, as per the title. I'm sure you can read. But for our viewers that are listening on perhaps Spotify or Apple Podcasts, maybe you can't see the charts. So explaining this a little bit more in detail, we are up on price about 4.4% versus same time last year. But you can see that this category has been hovering somewhat around that same price. 4.4% versus same time last year. Okay, that was correct. I just wanted to double check myself there for a second. So you can see that this portion of the market's kind of been hovering in this price category over the last 12 months, and we haven't seen any mega ups or downs here. So semi-detached houses are up 3.3% versus same time last year. And again, we're seeing things kind of staying within those checks and balances, within that range. You're not seeing any huge significant ups, but we're not seeing any significant downs. And we've known and reported on this channel before that these categories have been really protected off during all of this effery that has been taking place outside of the real estate market over the last 1 to 2 years. And this category has been nicely protected and something that's been very popular for those people graduating from their first condo and moving into their first freehold property. And then finally, condos. Like, guys, look at this. Condos. Where is the crash? Like, I'm just visually looking at this and I'm like, okay, so it looks like we had a little bit of a lower August in terms of price. And yes, things have dipped a little bit. We're down 1% versus last year. But if you think of everything that's been tossed at the condo market over the last year plus, I mean, like, we're holding on. And yes, we're not at the same price as we were 2 years ago. I get it. I hear you. I know you're going to tell me this in the comments. But I'm like, we're holding on and inventory is starting to come down. Like, have we made it through the worst period for the condo market in Toronto? That remains to be seen, but it seems like things are possibly trending in the right direction. And we are up versus August 2024, and we are up versus September 2024. Is this the beginning of a new trend line?
And the other thing, again, to watch is what happens in mid-December or what's starting to happen in the run-up to it with this new policy essentially aimed at high-income earners with no deposits or not very large deposits, is if we start to see a run-up in freehold houses in the 1.2 to 1.3 range, which there's not a lot of houses in Toronto that are actually move-in livable, that fit in that category. If that shoots up first, which is something that we're expecting, I then would expect to see the gap between low-rise homes and condos increase. And when that happens, usually the condo market starts to catch on fire because more buyers, just from sheer affordability, are pushed into the condo market. And so that is something really to keep your eye on, in conjunction with lowering interest rates, where we could see some of the buyers sitting on the sidelines, or first-time buyers, or buyers with bank of mom and dad behind them, starting to come back to the market. Maybe the larger units would be highest in demand, but I think that's where we'll start to see that trend line really bounce around, or start to move up, especially in conjunction with lower interest rates, which are going to continue to come. And at some point, I don't know what the magic number is, but there will be a number when the overnight lending rate gets to a certain point where the market will say, okay, this is a real opportunity, before things start to move upwards quickly.
Yeah, excellent points. All right, so let's look at monthly sales. So again, not to repeat myself, but sales are the transactions moving through the MLS system, the amount of deals that took place. Again, we're comparing October 2023 to October 2024, and we're looking at every month. And it has been a little bit up and down in terms of transactions, people sort of responding to what's happening outside of the market and trying to figure out the best time to buy, or are there deals to be had, and who's listing, who's not listing, what is the next move to make. So you're seeing that sort of response mechanism here in the data. But the fact that, as I mentioned at the top of the podcast, we're up 44.4% versus last year at this time. More people are selling and more people are buying. And have we reached the height of this chart this year? No, the busiest time in the market was indeed the spring, that April, May time period. But we've almost rebounded to those amounts of transactions as we move into the late part of the fall. So very interesting to see this chart trending again on this upward trajectory as it's mirrored some of the other slides that we've shared with you today.
One of the other things to keep in mind is the impact of the US elections, not just from what I talked about earlier, from the idea of having certainty, which is really important, but if you look historically at the US, and what's the saying, if the US gets a cough, Canada gets a cold, is I've seen statistics that go back, I think, to the late 70s, where they've tracked transactions in fall election years in the US, and they typically go down by about 45%, which is insane. And then sales dramatically increase the year after. And here in Canada, we haven't had that election that we're all hoping for. But at the same point in time, I do think that what happens in the US really impacts what happens here in Canada. This is speaking anecdotally, but that last election cycle in 2020, we saw a tremendous slowdown in the fall. And right after the election, we saw a really nice bump in transactions. And then that January, February, March in 2021, everything just shot up. So again, I think this is going to be an outlier, and I think it's going to have far more impact on transactions and confidence in making big decisions than most people are thinking or talking about right now. And so it'll be really interesting in a month's time when we're talking in December. I can't even believe I just said December. But when we're talking about in December, November's market, it could be a really interesting conversation, perhaps even more interesting than the one that we're looking at now, with that shocker of change or shift that we're seeing in the condo market.
All right, here's new listings. So again, new listings are exactly how it sounds. New product coming on the market for you to feast your eyes on your House Sigma app or your Realtor.ca app as you're standing in line at Starbucks waiting for your venti frappuccino. You're looking at the new stuff, the new shiny stuff. That's always the best stuff, right? It's like when you go shopping for clothes. I never go to the sales rack. I only want to see the new merchandise. It just always looks better, right? Always. So new listings up 4.3% versus the same time last year, and just like an all over up and down this year. But I really just want to highlight the fact that most sellers and their agents are not listing new inventory in December, January and February, just due to our climate here and the fact that people are A, distracted by the holidays, and B, our weather. Guys, it's coming. Oh my God, we're not even there yet. The weather sucks at that time of year. It's dark, it's wet, it's cold, it's slushy, it's mucky, and it's gray. Your house and your condo just don't look its very best at this time of year. Anything you want to add?
No, I think your description of the weather was incredible.
Oh, good. I just looked outside and I was like, oh my God, it's so beautiful out. I had this moment and I'm like, oh gosh, enjoy it while we have it. Get outside.
Fleeting moment.
Yes, it's been such a beautiful fall. So I'm appreciative. All right, wrapping this up here, we've got a couple more slides to get through. This is listing days on market. I just think this is also interesting. Just how long is it taking for something to sell? And we're up about 28.6% versus last year at this time. So things are taking a bit longer to sell. But as I mentioned earlier, we know why. There's more inventory, more selection, not so much FOMO, and people are distracted by other things happening in the world right now. So I think a little bit more velocity is going to come as we move through the later part of the fall. Time will tell, and we'll share that data when we get it.
And the other thing that we've seen across all segments of the market is the great properties really are selling. And a lot of the challenged properties or the poorly marketed properties, those are the ones that are tending to sit and stagnate on the market. But even on the condo sector, especially in the larger size condos, if they're priced right and marketed right and not tenanted, those are selling right now. So I think we're going to see, and we are seeing play out, the great properties are going to be moving even quicker. I don't know if there's a great property metric or great well-staged or well-priced metric. But I do think that those are the properties in this type of environment that are going to continue to turn really quick and start to pull the market forward.
I look forward to it. Looking forward to it. And then finally, just a brief snapshot of active listings or inventory sitting on the market. Yes, we're up 25% versus last year. And again, seasonality plays a big factor in this particular chart. So Ralph, in terms of looking at this number, what is your prediction heading towards Christmas of this year, or the holidays, I should say?
I think for the first time in a long time, it's starting to look like the market has its wind at its back as opposed to running straight into hurricane headwinds, which is great. So I think we're starting to see the early stages, and again, early stages, lower interest rates, political certainty, and a little bit more positive sentiment out there as a whole. And this new government policy in anticipation, we're seeing a bit of a ramp up, which could really start to accelerate once it takes effect in mid-December. And so I think you take all three of those factors, and it's starting to look like we could have a very busy or much busier or more in line with past years in terms of transactions across the board. And maybe we'll start to see price appreciation fall in line with it has historically. So I think there's a lot more positivity, and it feels like things are starting to move, and we're starting to see it. And we did see it in the data in the month of October. So what I was saying earlier still applies. I just can't wait. If I could go into a time machine right now and be having this conversation in December about November, I think people might continue to be a little more surprised, and the market might continue to outperform the narrative that we're seeing in the media, and then what they're saying is happening in the market versus what is actually happening. Because as you can see with that earlier slide with condo prices, they have not crashed, and now we're seeing inventory come down. Too early to have any celebrations right now, but it does feel like we are on the precipice of a shift. And I think once we see about 3 months of data, I think at that point we'll be able to call it a trend.
Okay. I'm in agreement. I'm still slightly cautiously optimistic. Like I just feel like, I don't know, I would like to see another month first before I feel like I can jump in with both feet on that forecast. I would love that to be so. I do not think prices are going to increase in an insane, robust way.
No.
I think affordability is still a big challenge. I also think the city overall is challenged right now, and it needs a bit of a cleanup and an infrastructure improvement. And I think people need to feel good about living in Canadian cities right now. but I do think that that will be influenced by a lot of things very soon. So I think there's still a little bit of hesitancy out there, and I understand why. But if we could just see some of this inventory get chomped up and a little bit more velocity and a little bit more predictability so that we can coach our clients on the buy and the sell side a little bit better, and people on the buy and sell side can feel more confident about making a move, I think that would be helpful. I am not saying, commenters, that prices are going to skyrocket. I don't think that's going to happen. I think we're just going to see a little bit of a quicker pace and some of this inventory get moved out of the system, which will help improve everything for everyone. So I'm looking forward to it. We'll report in when we get the numbers next month, but we'll keep a close eye on all of this. And of course, if you have questions, feedback, ideas, post them in the comments below. And of course, you do not have to agree with us. We are super open-minded about your ideas, and we love the comments. They're, especially when they're constructive, and we can have a great chat with you on our Fox Marin YouTube page, the community that we have there. It would be awesome to hear from you. Ralph, is there any last couple of comments you have before we wrap up for today?
I'd just like to thank everybody for tuning in. We so much appreciate our viewership and our Fox Marin community. If you like this content, please, 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 please be sure to hit that subscribe or like button. It helps our algorithm and just gives us more positive feedback to continue putting all this work to keep everyone who's watching informed of what's actually happening in the market. So thank you so much for tuning in.
Thanks, everyone. Bye, Ralph.
Bye.